minding my own business, having a spot of Friday lunch, but Bitcoin tumbles to the downside as a horrible jobs reading jolts the market. What does this mean? Where are markets heading? And what consequences could this have? Guys, this is not a good reading. You got to remember, this whole week was all about jobs. On jobs figure came in too hot, market started pricing in bad. But then the day after, on Wednesday, we got the ADP jobs figure, which came in really low, less jobs created, suggesting that the jobs market could be slowing down. Remember, that was the lowest figure since January 2021. But the official reading, the jobs figure, has just come in, guys. And take a look at this for the headline. Expected was 170,000. That came in at 336,000, wiping out, and one of the highest figures we've seen since January of this year. So this labor market is far from cooling off. This labor market is still hot, and that could be worrying people in terms of what that means for the revival, the bounce back of inflation. Could there be another climb in inflation? Let's take a look here, because obviously markets initially tumbled to the downside. That is because markets have now started to price in more that we could get 25 basis points in the next 3 weeks. Because on November the 1st, we've got the next FOMC meeting. Remember, the FOMC have told us, the Fed officials, Jerome Powell told us, they've got one more rate hike priced in already in their projections. When are they going to use it? Are they going to use it in November? Are they going to use it at the next meeting in December? Previously, markets were like 15% thinking maybe they'll price it do it in November. Now 33%. So that's jumped up quickly based on this negative jobs figure coupled with the hot jobs figure we got on Tuesday as well. So lots to play for here. Let's jump on over here to the traditional markets to get an understanding of how they're reacting, because you can see here NASDAQ plummeting 0.75%, S&P down 0.7%, and even the Dow Jones down 0.5% here. And this makes complete sense, right? Because if you look here on the hourly chart on Bitcoin, big candlestick here to the downside, then recovered somewhat and showing a little bit of strength. So it's very interesting here how Bitcoin's hovering around this 27.5 mark here. We will take a look at the key levels. Speaking of which, if you want to buy or trade in these cryptocurrencies, you can do so using the links in the description to Bybit or BitGet. Those are the two exchanges I use. Supports the channel. You're going to get some amazing bonuses and fees as well. Couple that with our free Telegram group, ijaz.uk/TG, where I give you free trade setups. Now, we've also got a VIP group where you can pay for more regular trade setups and get a real insight into the exact trades I'm taking, the TA I'm doing, how I take my entries, how I do my stop losses. That's all in the VIP group. If you want to get in there, make sure you message me in Telegram and you can get in. So let's jump on over here into the dollar index, right? It's this dollar index which is going to benefit, as you can see here, from the horrible jobs reading, risk rotating or flowing back into safe assets, which doesn't bode well for the NASDAQ, like we've just seen, and doesn't bode well for Bitcoin. So now we need to really analyze our key levels here on Bitcoin. Now we need to come back to this chart, launch it back up to the 4 hourly, and bring out the EMA ribbon to see where do we sit here on this chart, because you can see here this 4 hourly candlestick tried to lose the 4 hourly EMA ribbon, but we're managing to hold, right? The bulls managed to step back in the last hour or two to bring it back in. It's really important that we hold this level and work our way up. Now, you could see yesterday that already we showed a bit of weakness. Remember when we bounced from the CMA ribbon here? What did I say? I said it was very important that we break this previous peak, 28.6, but we didn't. We just curled back over. So the bulls are showing a little bit of weakness here on the 4 hourly trend, and I wouldn't be surprised to see if the bears can retake this level to try push us here back to the downside. If we notch this up to the daily, you'll see we got a little bit of breathing room, right? You can see we spent this whole week pretty much here above the EMA ribbon. The EMA ribbon here is trying to flippen, which is fantastic, but we may just need to cool off. We may just need to come down here into these levels on the EMA ribbon, maybe 27 flat, maybe even down to 26.9 and we're okay. But if we get any lower than that, we will be losing our daily EMA ribbon prematurely. And that is not a good look for Bitcoin. So really, where are we at in this market? We're in this kind of impasse where we're trying to understand, has Jerome Powell actually got control of this market? Is he actually bringing inflation down, or is it going to rear its head again and kind of shock us to the upside? The only way we're going to find that out is by waiting for the next CPI reading. We need to wait for the next CPI reading, plus the PCE and PPI inflation figures as well, to get an understanding of what's happening. Now, if he can bring inflation down whilst the jobs figure staying high, that's absolutely fine. Then nobody cares. But the problem right now that the markets have is normally there's no way to bring inflation down generally without weakening the back of the labor market. And so far, we're not seeing that. Jobs figure horribly high. Now the non-farm payroll surprising double almost to the upside. That's the problem, and that's the bit we need to resolve here over the next few months to figure out, is Jerome Powell managing to get a soft landing, or is inflation rearing its head again and we're going to need to have an unplanned another set of hiking getting us up to 6% and beyond. And then if we head up to 6%, what are we going to break? Will we trigger into a recession? Will we end up damaging regional banks and the credit sovereignty of many nations? This could have a big knock-on effect towards a financial crisis, such as 2008, 2009, when I was working at an investment bank, right? Painful times, we don't want to see those. But we've got a few steps before we get there. For longer term, I'm excited. If we get lower price points, I want to be nibbling. If we get back down to 25, I want to be nibbling. And we're getting closer and closer to our halving. So for me, I like that pain. I like that capitulation. I like when people panic. That's when I want to be adding to my positions. Am I adding right now? No, not just yet. 27.5 is still quite frothy for me. I want to see, do we get a meaningful pullback? Do we come down to 25, 26 even, and I can get some nibbles around there. If you appreciate these real-time updates as and when they happen, smash up the likes. Don't forget to subscribe. You're going to enjoy this video from earlier today here on the most undervalued altcoins, and I'll see you in the next one.